and Managing Director of Lemon Tree Hotel joins us now. Mr. Keswani, good morning. Thank you for joining us. We are trying to understand from the hospitality industries that the revenge travel concept, which was more like a compulsion at play, which started after 2 years of COVID lockdown, is that likely to extend itself towards the second half of this year as well?
Well, nearly certainly, because if you look at what happened in this previous weekend, this was this long Independence Day weekend. All leisure destinations were more or less full and were at rates which were well above pre-COVID. So as a secular trend, I don't see if it has grown 10x. I'm just taking a number illustratively. I do think that habits have changed. People are used now to traveling in shorter breaks to closer distances. So my broad guess is that if it was X before COVID, today it will be 2X or 3X on a secular basis. And therefore it will slow down, but it will be much more than before.
How much has business travel normalized? And will
I
business...
would say about 80%.
80% has stabilized?
Yeah.
Okay. So on an average, what your business business occupancy rates were, both in terms of IRR and percentage numbers, that is still below pre-COVID, I would imagine.
No. Average rates, our industry is extremely fragmented. So in the past, average rates would only really go up in a specific market, say like Delhi, when everybody was doing well. So what the interesting trend that I have personally seen is that today rates are going up across the board without occupancy having picked up to that extent. So in summary, occupancies today are still less than pre-COVID because there is still the catch-up of the full business travel. But average rates have gone up above pre-COVID. It's as if in the last 2 years, everybody has been so beaten down that there is this catch-up happening in pricing, although demand hasn't caught up to pre-COVID levels. But broadly, I see pre-COVID levels of demand from October onwards. So there will be a further hike in pricing and there will certainly be a further increase in occupancy.
Interesting. Mr. Keswani, the other thing that Nikunj was trying to ask, whether or not business travel has actually picked up, or is it only leisure travel that's taking the precedence?
Well, as I said, business travel is at 80% of pre-COVID. Leisure travel is perhaps at 4x or 3x of pre-COVID at present. And by H2 of this year, my best guess is that business travel will be back to pre-COVID. And there will also be the advantage of foreign travelers coming back to India, which is typically about 7 to 10% of the total demand. And there will be meetings, incentives, conferences, weddings, and so on, which will pick up in H2. And leisure travel will continue to be as strong as it is today. So if you just treat it as a sum of parts, demand will be exceeding pre-COVID levels in H2, and business travel will be at least equal to pre-COVID levels, again, by H2.
Interesting. So as a strategy, what is it that you're doing in terms of new properties, etc.? What is the expansion and the capex plan for the balance of the year and even going forward?
Well, in our case, we are building the largest hotel in India, which is close to 700 rooms in Bombay, which is about 1,000 crores, of which we have put in roughly half. So in the next, in the balance of the year, we will spend probably another 100 to 200 crores on that hotel. Other than that, we are not spending any capital. We aren't incurring any capital expenditure. Our growth strategy is quite similar to the other listed players. We are going asset light. The big advantage of COVID is that I think a lot of standalone hotel owners want to now be part of formalized or branded hotel chains. So we are finding very large demand there. In fact, I have publicly said we get at least one query a day from a hotel owner saying that they'd like to convert to one of our brands.
Good morning, Mr. Keswani. So you get one query a day, for taking over the hotel. You want to follow the asset-light model. Now, in the past, you have said you're negotiating with about 100 hotels. You aim to have 20,000 rooms. Is all of that still feasible? If yes, by when? What's it looking like?
I had said that this would happen within 4 years. So right now we are about 8,500 rooms. We expect to open another 1,000 rooms within the next 8 to 9 months. So that is 9.5. We have an additional pipeline, and we have signed some more actually as we speak. So you can assume up. You see, there is a catch up here. So how many rooms do I operate? How many rooms do I have signed? So at present, we operate about 8,500 rooms. We have signed another 2,000 rooms. That's 10.5. We expect we will be able to add about 1,000 owned rooms and about 8 to 9,000 managed rooms in the next 4 years. So that's how we came to this simple 20,000 number.
Okay, so that's the plan, 20,000 rooms in about 4 years. I'm just going to, because you were talking about what other hotels are doing, I'm going to take a little cue from that. What we started seeing during COVID-19 was hotels, not necessarily business hotels, also try and monetize their F&B offerings, the way they're also taking to digital apps, whether it's aggregators or building their own apps. So in the digital strategy and F&B strategy, though you're primarily also business hotels, what's the play there?
See, we typically, when you are comparing us to people who are F&B heavy, so F&B heavy hotel companies who are typically five-star hotels, have about 55 to 60% of their total revenue is rooms, and the balance is food and other income. In our case, we are more focused on rooms, so we have roughly 75% of our income with rooms and the balance in food and so on. So we are not so focused on food sales. Also, the flow through or the operating leverage from selling food is much less than from selling rooms, which is why, I had said that we will cross 50% net EBITDA from this year onwards in Lemon Tree. And the only way you can do it is if you have higher room sales. So we have a slightly different strategy because we are looking fundamentally at operating leverage and sweating our owned assets. The other thing, as far as digitalization goes, we have ourselves tied up with Boston Consulting Group, and we are undertaking a very significant digital transformation journey in the next 2 years, when we intend to actually completely transform the company and make it completely digitally enabled, whether it's from the revenue side, the cost side, the customer side, the loyalty side, or even the process side. So that is something that will play out in our case in the next 2 years.
Okay, Mr. Keswani, great to have you today on ET Now, and thank